Hey everyone, thanks for joining me on this market update. So jumping right into things, we'll take a look at the inflation numbers that just came out. So we had the PPI coming out today, coming in at 0.2% under expectations for the PPI year over year and month over month, as well as 0.3% under expectations for the core PPI year over year and month over month. So flipping over here, we'll look at the macro and we can see the market's reacting very well. We see Bitcoin with a nice recovery. They were actually down to 89,000 yesterday on some fear. We saw ETH hit about the 2,900 level, as well as we saw red across all the major indices. Nice to see a little bit of a recovery here, a little bit of weakness in TLT. Silver actually was red and has flipped green, and gold is green as well. So interesting to see risk off assets performing well as risk on assets. Obviously, the market is reacting well to the numbers. We can see here quickly just looking at a trend line from the prior two cycles of Bitcoin connecting the highs. We can actually see we've come through and we have resistance here, as well as resistance here. So just a little interesting trend line that we did kind of come into that as our first resistance. And then we can pull another trend line also from the current peaks, which actually coincides with the support that we're able to find in this bull flag pattern that we're currently in. So looking at Bitcoin from a weekly perspective on the RSI, we do see it kind of curling back up a little bit. So we are able to kind of run a little bit on the weekly chart. The MACD is quite overextended, kind of looks like it's heading back towards what could be a bearish cross. I do argue that these indicators are also lagging, so by the time that it does flip bearish, we might already have experienced some of the downside. What I want to kind of show you and allude to is the prior rally breakout. So we can see here in this breakout here, we had a long consolidation phase, kind of coming back and tagging one of those Fibonacci retracement levels. In this case, we only managed to hit the 0.5, and I believe that was due to the relative strength from the success of the Bitcoin ETF. Generally, so we're looking for a similar kind of price action to play out in the current breakout, looking for that larger retracement kind of to those lower Fibonacci levels. We see the 0.5 kind of starting here around the mid 83,000 mark, and then coming all the way down to about 70,000. Now this isn't my base case, but I do think we may see the potential to kind of come back and retest these highs right here. It's just a thing to note, in prior cycles of January as well as January last year, we did experience a 30% drop from peak to the local low. So if we were to experience that roughly, that would kind of take us right down to the middle of our golden zone, also with that confluence of the prior all-time high horizontal support. Alternatively, we could also continue just bouncing if this support is able to hold. We might go in for a little more sideways consolidation and then break out further. Ultimately, it could go either way at this point. It's just going to depend what we see from markets going forward. And as well as the new administration, we can kind of see the market reaction coming in from them. But looking at Bitcoin there, it looks pretty good bouncing from support, although the support I would say is more dubious or weaker than if we were to come down and revisit this zone here. That being said, I'm building a swing long position in Bitcoin from about 88,000 to 90,000. So took advantage of a little opportunity to buy there, and we're just going to ride that back up. But ultimately, as mentioned, we're going to save our accumulation buys kind of for these levels down here. Just keep in mind, we did pack our bags much earlier, so I'm not looking to take excessive risk up here at the highs. Instead, I would rather just take a nice risk-adjusted late curve entry kind of down here towards stronger support. We can zoom in on the daily quickly just to kind of get a look at the structure of the bull flag. And again, our indicators are looking pretty good. RSI looks good. We're got the bullish cross kind of just approaching that neutral territory. So a good bit of room to run. Our MACD also approaching that that neutral territory, about to flip green hopefully. Let's throw on our whale buy indicator. So it doesn't show that we have any whales stepping in to buy as we did over here. Ideally, yeah, we want to see that gold bar print just showing that whales have really stepped in and started to accumulate. but it doesn't look like that is the case on this move so far. That could change. We'll just keep an eye on that. Also looking at the volume profile, so ideally we want to get above that volume profile and kind of continue upwards. If we look at the bull flag that we're currently in, we've got this down sloping trend line, and what we're going to want to do is break out above it, kind of taking out this high here. We're going to retest the down sloping trend line now as support, and then we can continue to new highs. So how I'd play this, essentially I'm either going to wait and I'm going to accumulate my swing position or add to my swing position down through here, kind of in this support. Or if we get this breakout move, then if I want to add to my swing position, I'm going to look to enter on this higher low and confirmed bounce of the breakout. So we watch price. We're not going to buy here because we don't buy resistance. We're going to wait for confirmation, and then once we have confirmation of a breakout and likely continued uptrend, then we're going to take this entry right here. While it is slightly higher than the entry that we're currently at, it's also going to come with less risk just because we wait for that confirmation of trend as well as the breakout. Otherwise, we could alternatively just see it come up to resistance and then reject, kind of continuing that consolidation pattern before breaking out. Ultimately, it could play out over the next few weeks up until February. No one really knows. We don't have a crystal ball. But just keeping in mind, either building that swing position on the breakout and retest, or building that swing position right here and saving more of your money kind of for better opportunities down here, testing these lower support levels. So without further ado, we'll jump into some miners. Take a look at them today. They should be doing quite well just because the IWM is also performing very well. Again, looking at miners, we see weekly RSI curling back up here with that higher low. We do see the MACD histogram a little bit red, not quite as red as I would like to see it, just to show that we're slowing down on the selling pressure. There is room for kind of this to go through a little bit more sideways or downwards consolidation. But what we do see is price bouncing from our 618 level again. So you can see throughout the cycle, miners essentially have gone on these runs followed by 50 to 70% retracements. We see here 2 to 3x run, 2 to 3x run, 2 to 3x run, 2 to 3x run, so on and so forth. Generally, each of these tops out, and then we revisit the Fibonacci golden zone between the 618 and the 786. So by following these rallies and adding to your positions on the Fibonacci retracements, as well as taking your profits on the 2 to 3x pumps, then you're really able to kind of build a solid risk-adjusted position by compounding those gains. Essentially here, so if I started and let's say I want to put $10,000 in miners, you ride it up 2x, you've got 20,000, you pull 10,000 off the table, you wait for that 50% retracement, in which case you redeploy those funds, you ride the next wave up to that 2 to 3x, and then you take those profits, redeploying them on the next retracement there, and so on and so forth. So essentially this has given you about 6 different opportunities this cycle in miners to build positions, or to just catch 2, 3, 4x runs. That being said, individual miners have all ran kind of differently, so we have all of them returning anywhere from 150% this cycle up to 20x. So each miner is different. If you want a headache-free kind of way to invest in the miners, you don't want to follow fundamentals or individual stocks, then this ETF is a good option. But again, your returns could be a little bit more stifled, or alternatively, if you don't make proper picks, your returns might actually be better. But again, we like to focus on fundamentals and think we can do a good job of individually picking strong miners that might go on outperformance runs. So again, just as we did in all the prior rallies, we came down to that 618 and we start buying right in here. Ultimately, we are reserving more cash for a potential revisit down to this level where there would be some confluence maybe with this upsloping trend line. So we're keeping the 786 in our minds always and keeping a cash position ready to take advantage of that type of move. Zooming into Mara, go into all the individual miners now and just cover some levels that I'm looking at. So here we've got our resistance level, we've got our upsloping trend line, we've got our cycle low to high Fibonacci golden zone. So kind of if you're looking for a swing position in Mara, anything between $15.50 and kind of $16 might be what you're looking at, kind of with this upsloping trend line. You do have a little bit of support stacked underneath it, but note that this cycle low to high Fibonacci golden zone is going to be stronger than this upsloping trend line. So if you are taking a swing position here, just note that if we do experience more market weakness, I expect prices to come back within this cycle low to high Fibonacci golden zone. I'm kind of targeting $10 to $15 for Mara is where I want to start accumulating again. That's where I bought last time. So it came down to about 13, I think was the low. And then we ran that back up to about $30 or more. So again, showing you how taking that taking your initial investment off the table at 2x or more really just protects you from the volatile swings of these miners. And then it actually would give you an opportunity to not only double your share count or just protect those gains and have a free position to ride up for the rest of the market. So again, $15 kind of down to $10 is what we're looking at for Mara, and then these are kind of worst case black swan prices. Next up we got Riot. Same thing here, kind of came down, tagged our cycle low to high golden zone, confluence with the bull market support band. This was also a low time frame golden zone, so quite a lot of support stacked here. I'm not surprised that we did see that bounce here. Now we're back above the bull market support band. Have a nice little bullish cross of the two moving averages right there. Good to see. We want to see it hold above this, maybe take out these highs, print higher lows, and continue maybe on a reversal structure there. So looking for Riot, we might be watching a very low time frame entry. If you're looking to DCA or swing trade, you'd be looking at approximately $11 down to about $10.60. But I argue that I'm going to be waiting kind of for the sub $10 accumulation range to potentially show itself again. Otherwise, I'll just allocate that capital elsewhere. Looking at CleanSpark next. CleanSpark's one of my favorites. They've been an underperformer kind of recently. That being said, they did provide massive opportunity this cycle, running from the low to the high at about 16.5x. They also had about a 3x move here and a 2x move here. So yeah, if you bought the highs and you held through this, it would suck to be a CleanSpark holder, but only if you focused on that price action. So most of us, we've been here, like these people have been here for a few months, where some of us have been here for multiple cycles. So we're really, again, that's why I come up with a strategy. We're building these risk adjusted positions. We're not chasing up here. Like we're building our positions down here. We're building our positions down here. We're building our positions down here. We find the strong fundamentals, and then we look for the key levels of support, and then we wait for price to come to those levels, and we pull the trigger, and then wait for the gains to come to us. As those gains come to us, you make sure that you're utilizing stop losses or you're taking profits to secure those gains, because as we see here, the market can give back, the market can take what it gives you pretty quickly. So here, everybody thought CleanSpark was going to break out, go to crazy new all-time highs. Unfortunately, the market didn't have that in store for us, and we ultimately went on a 67% retracement. Lots of retail investors were shaken out of their positions on this retracement, but the ones who know what they're doing, they were buying this here and riding it back up, and the ones who were buying here are also buying here. But just keeping in mind that these lower support zones are still technically in play, in my opinion, and reserving some capital for that 650 up to about 850 range. I've done all the buying I want to do in the $9 to $10 range. I would argue if you don't have a position on CleanSpark, or you want to take a bit of a swing position, or you think the lows are in, then you might want to take a bit of a position here, just due to the valuation. It has lagged more than some peers, so I do believe it's a bit more undervalued. But note that this is going to be a higher risk price, just because we are coming into a bit of resistance here with the bull market support band. Moving on to Cypher. Cypher is another one that's been pretty impressive this cycle, kind of riding this upsloping trend line with a little deviation below here. We did break and tag this low time frame Fibonacci golden zone, currently bouncing from there, contending with the bull market support band. So again, like the other ones, we're just going to wait and see where this tops out and then go from there. We're not really looking to buy into resistance here. Next up, we got Bitfarms, who actually are flat on the day, and surprisingly, Bitfarms has been a lagger this whole cycle, kind of the worst performing miner for a few different reasons, but fundamentally speaking, in terms of production, they do have good production metrics. It's just some of the logistics kind of behind management and their growth strategy, as well as some of the issues with Riot and their relationship, has kind of put a bit of a bad taste in some investors' mouths, I believe. So nonetheless, Bitfarms sitting in that cycle low to high Fibonacci golden zone, kind of just above the mid range of it. We do see this bearish engulfing candle on a bear flag structure, so not looking good from a technical perspective compared to the other miners. I would think we likely see a further breakdown and maybe test of lower areas in this zone. So kind of looking for an entry down towards $1.10 for Bitfarms. I'm not really interested in buying right here. I would rather allocate my capital elsewhere. Next up, we got Hive. Hive is an interesting one again, just mostly due to their relative valuation of their company. The market cap is just about $400 million, and I think they hold about $300 million in liquid assets, so most of that being about 2,800 Bitcoin and some cash. Pretty enticing metric to me if 75% of their market cap is held in liquid assets, which means about $100 million of the business is being valued at the current operating hash rate of 6 exahash. And with their future pipeline of 15 exahash, I believe that valuation of 400 million for this company is a little ridiculous. And I also think it might make them a potential target acquisition for a different company. Just makes sense to, if you get 75% of your value essentially in the liquid assets, and then you get that efficient mining business as well. Other thing to note, that Hive does utilize green energy and is very well diversified with efficient operations. So it's a pretty interesting business with a lot of liquidity, and why I think they might be a good option as an acquisition target for a larger miner given their relatively low market cap. Excuse me. All right, getting into Hut. Hut's been a overperformer lately. Again, likely due to both their new fleet upgrade they've announced, as well as their $12 billion data center deal. There is some speculation that that deal may have something to do with Meta. If that does come about, then that might garnish some huge premium. We might see a big pump. I argue that since Anthony Pompliano has started to talk about Hut, we already have seen it capture this large premium. So likely that AI deal kind of got priced in advance, as they likely knew, obviously as an advisor on the board, what might have been going on. But another thing I want to note about the data center build out is that Hut is going to be required to put up $2.5 billion of capital to fund their portion of the build out. Interesting to note, because without selling, if they they want to hold all their Bitcoin, they've got a $500 million ATM open. They will still need an additional $2 billion essentially to fund that build out. And just to keep in mind, their market cap is just over $2 billion. So if they were to raise this capital through a dilutive capital raising vehicle, such as an ATM, then that would actually be a very substantial amount of dilution. But alternatively, you could argue that the value added from the $12 billion data center would kind of offset that dilutive effect. But until we get more details surrounding that, we won't really know. So here, again, I just pull my Fibonacci golden zones. We've got the low time frame zone kind of stacked on top of the cycle low to high. So anything kind of sub $18, you might start to look to build a position in Hut, kind of down to $10. I'm not sure if we'll see that, but if we did, that might be a great late cycle accumulation opportunity. And then just riding that back up. So next we got Iris Energy, another favorite of mine. It's experienced some hyper growth this cycle. Essentially the last year they've grown from 5.5 to 32 exahash. Very impressive. The industry leading cost to mine and the lowest efficiency, as well as a large pipeline in the works, with the potential for further AI and HPC diversification and actual current HPC revenues. So that's one thing we do see. A lot of these miners are starting to try and capture some of these AI HPC premiums without actually having any actual revenue. So most of it is just them selling megawatt capacity in their data centers to the hyperscalers, whereas Iris Energy, Cores, and BTBT, as well as Hive, all actually have current HPC revenues to the tune of millions of dollars. So Iris Energy right now, I think their annual run rate for their HPC business is around $32 million, but they are increasing it, increasing their GPU count, so we can expect those revenues to increase as well. And another one came down here, bounced from the bull market support band with confluence of our golden zone. Again, sitting just above it. This is where we did our buying in here, so I'm just sitting on my hands waiting for the market to show me where it wants to go. I may add to my position again if we dip below $10, but also ultimately targeting this lower region down here, kind of $6 to $7, as well as a worst case scenario, these areas down here. I'd argue that we probably won't see it come down to these levels just due to the fundamental growth that Iris Energy experienced over the last year. Looking at TeraWulf next, another one that's kind of captured a bit of premium on some AI news. They recently just had a deal providing I think it's 70 megawatts of infrastructure to Core 42. So a similar deal to Cores, or similar to one of the contract renewals from Core Scientific with CoreWeave, supplying 70 megawatts of infrastructure, and I believe that deal is valued at $1.2 billion of revenue over 12 years. So yeah, we can expect kind of maybe a similar revenue there from Wolf. But looking at them here, they came into our low time frame DCA zone, bouncing out of it. They're just above it, so not necessarily a bad buy right now. Slightly higher risk though, coming into that bull market support band as resistance. We do see a bullish cross of the bull market support band. Yeah, so we might just be due for a little bit of chop solidation kind of underneath this band before we get back above it. Kind of what we saw here and what we saw here as well as here. So yeah, just keeping our eye on this zone, targeting larger buys kind of down towards this cycle Fibonacci golden zone starting at 414 down to 267. And next up we got Core Scientific. So another one, lots of relative strength, again, due to the AI HPC that it's been able to, the AI HPC deals it's able to secure, and then the retail hype following that. So again, we see our low time frame DCA zone here, kind of 1367. We just missed it, so didn't quite get our entry. That's okay. We're not always going to catch every entry. But right now, we are contending with this upsloping trend line, which is also basically our bull market support band. And we've had a bearish cross right here. So again, just watching to see if we've got more consolidation to do. And then if we do get the opportunity this cycle, I would be a buyer, of course, kind of under 875. Just given their future AI HPC deals and revenues, it would be a bit of a no-brainer to me. Looking at Bit Digital, another one I mentioned that has a lot of current AI HPC revenues. They also have an Ethereum staking business as well as Bitcoin and Ethereum on their balance sheet. So they're poised to really kind of benefit from the upcoming alt season and ETH outperformance if it ever comes, as fingers crossed. Obviously, I think it is going to, but it's been a bit of a headache this cycle so far, trying to figure out when exactly that's coming. But ultimately, riding up these trend lines, bouncing from our low time frame golden zone, sitting above it. Not the worst buy right now, but again, this is where we want to do our buying down here, kind of closer to this trend line with confluence of this zone. Again, our bull market support band, a bit of a bearish cross right here. So we'll just see, we might be again in for just that consolidation phase, and we might see another potential to get an entry back in these zones. Quickly looking at a couple proxies outside of miners. So we've got Coinbase here, came in again, tagged our cycle, our low time frame zone, bounced above. It looks to be the bull market support band here looks to be curling back towards what could be a bearish cross, but holding this support so well so far. We'll see where it kind of tops out at and then see what the next likely move might be. MicroStrategy, again, another crowd favorite. It's been insane this cycle, but a lot of people telling you to buy up here, and not a lot of people were probably buying down here. So I just had people telling me to buy MicroStrategy at 500, 550, when they're trading over 3x premium to NAV. I just follow my strategy as always, pulled the Fibonacci levels, and then I wait for those entries to come to me, which we saw right here. We saw it come down to our Fibonacci golden zone, tag it at the bull market support band, and now we're currently also flipping our even lower time frame high risk zone into support. Hopefully we can attack this down sloping trend line, change our structure to the upside, and then we can go and attack these highs again. But really just showing you to not listen to people when you feel like an asset is overextended or overvalued. Don't listen to the people telling you it's the last chance that you're going to have to buy. It's the last chance you're going to have to double, triple, quadruple your money. There's going to be endless opportunities in this space. But if you lose your capital by buying up here and capitulating somewhere down here, you're not only going to scare yourself out of the market, but you're also going to prevent yourself from ever having that opportunity to grow your capital just because you didn't manage your emotion up here. It's like, so when you look at a chart like this isn't something I'm going to be buying into up here, right? So just, again, manage your emotion, pull the zones, and then execute your buys and sells as they come into your levels. So that's it for the miners and the proxies for today. I hope you got some information that was useful to you, maybe some levels to watch. We'll continue with our updates going forward, and we'll continue building the best risk-adjusted positions we can in the strongest assets that we can identify. Thanks for tuning in, and have a great day, everyone. Bye.